We have breaking economic news. New inflation numbers from Canada, from StatsCan in Canada, have been reported. They are significantly stronger than expected. Inflation on an annualized basis in February ran at 2.6%, much stronger than the 2.2% expected by economists, 40 basis points stronger. The monthly number also comes in much stronger than expected. So from January to February, the CPI index rose by 1.1%, almost double the 0.6% that was expected. And in terms of the core measures, there are two of them, core median and core trim. They both come in stronger than expected, although the gap is more modest than it is in headline inflation. Core median and core trim, both those measures of core inflation, come in at 2.9%. That's either 10 basis points or 20 basis points more than was expected. So the takeaway is inflation in Canada running much hotter in February than economists had forecast. For more on the numbers, let's bring in an economist. He's Richard Forbes, principal economist at the Conference Board of Canada. Richard, you're just hearing these numbers for the first time. You did expect in some preview notes, you said you did expect to see inflation come in the mid 2% range. So you seem to have called this correctly. I think 2.6% would be in the mid 2% range. How do you explain inflation running much hotter than economists had expected in February?
Yeah, it is a little bit stronger than we had thought. We were thinking around the 2.4, 2.5% range. The Bank of Canada did note in their interest rate announcement last week that they were thinking about 2.5% as well. Big reason for that is the GST holiday, of course, ended in the middle of February. So that naturally pushed the prices up for many of the goods and services, particularly restaurants, which we're seeing a big price reduction over the holiday. And then beyond that, the Canadian dollar has been weak for months now. That's pushing prices up for imports. So yeah, it's not too big of a shocker, the release this morning.
Do these numbers make life more difficult for the Bank of Canada, which is currently cutting rates to stimulate the economy?
Yeah, absolutely. The bank's going to be in a difficult situation. They cut interest rates last week, because they mentioned that the business and consumer sentiment has been pretty weak due to the tariff threats. But then on the other hand, if the inflation is running a bit hotter again due to a weaker dollar, or even if these tariffs go ahead, then it's a lose-lose situation, right? They cut interest rates to stimulate the economy, but then refuel inflation and the other way around.
Richard, it's John O'Connell. As you said, the Bank of Canada is in a difficult position. We've heard the U.S. administration and the Federal Reserve Board saying they may look through one-off shocks because of tariffs and those kinds of things. Do you think the Bank of Canada does that? And does this also maybe help inform the federal government's responses to tariffs? I heard Carney yesterday saying that the options are fairly limited to Canada in terms of raising tariffs against American imports, and how much of this is really feeding through by what has been a very, very weak Canadian dollar for the past 6 months, and it's just finally catching up with us.
Yeah, I think the response from the Bank of Canada, like we were talking about, it's limited. So I think the response in terms of retaliatory tariffs has already been kind of laid out. I think, looking ahead, there's still some room in terms of fiscal capacity for the government to step in and provide some support to consumers and businesses. We've seen a bit of that announced last week or 2 weeks ago, rather, with a $6.5 billion package aimed at businesses. But the government still has some fiscal capacity to step in. But you're right in saying that the Bank of Canada is limited in its ability to fight these tariffs.
Richard, just a follow-on question, because I think you hit the nail on the head. I mean, in many respects, the present government is still the government in charge, and whether they introduce a budget or not remains to be seen. And tariffs are obviously hurting their own constituencies. Do you think the government may come out with a major package of fiscal stimulus as part of a solution against Trump, and therefore theoretically buy the votes to try to win the next election?
Yeah, we think that's a possibility. certainly that's on the table. I think what the government's doing right now is waiting, still hoping that cooler heads prevail in this trade war. I know Premier Ford and some of the other Canadian officials met in Washington last week and have another meeting scheduled this week. And they noted that the temperature is coming down. So I think there's still some hope that something will be worked out, whether it's something more modest than was threatened originally, or something, renegotiating CUSMA early. So I think the federal government's kind of waiting to see what happens in April before actually releasing a package. But I do agree that a major stimulus package, similar to what we've seen in the pandemic, could certainly be on the table if this goes ahead.
In some notes in which you looked ahead at this situation, you said recently in March, U.S. tariffs on Canadian steel and aluminum and the federal government's retaliatory measures will begin to affect Canada's CPI. How dramatic might the effect be in March, and will we see it become more dramatic in April, May, and subsequent months?
Yeah, in March, March 12th, we had the steel and aluminum tariffs on the U.S., products going to the U.S., and then the retaliatory tariffs on a lot of the similar materials coming into Canada. And then, of course, the $30 billion retaliatory tariffs announced on March 4th from the government of Canada. A lot of that's consumer goods like orange juice, different kinds of groceries. So there will be some bit of an impact starting in March. We don't see it to be too big of an uptick just for 1 month. But the longer this goes on, the worse it's going to get. And it's essentially the other side of it, is that the Canadian economy is we're thinking it's going to cool down a little bit due to a lot of precautionary savings for consumers. So that's going to limit the impact of the price hikes in March and going forward.
Richard, thank you very much for this conversation. Thanks for helping us understand these numbers as soon as they hit.